Okay, hi again. We had some technical problems. Maybe I was too positive saying that we were at a turning point in the business, because then the technical aspects kind of came into play. But in all seriousness, I want to start again and just make sure that all the data is in the webcast. So we start from the beginning. Again, my name is Birgir Jónsson and I'm the CEO of Play, and I will go over the Q1 results in this presentation with Þóra Eggertsdóttir, our CFO, and she will come in later and handle the financial results, and I will then go into the outlook and the future of the business. So 55,000 passengers, 62% load factor, and 88% on-time performance, which is quite an achievement in a difficult winter environment in Iceland. Keflavík Airport is always hard and tricky to operate out of in the winter season. So this is a great achievement of our team to establish this. And also the fact that we have almost an equal split of passengers, to and from passengers. So Icelandic people going abroad and tourists coming to Iceland. A testament to the fact that we have been quickly able to establish ourselves in the international markets. In that quarter, we didn't have any via operation. So this is the last quarter that we will report these two market segments. From now on, we will have a via traffic also to strengthen the business further. And we can kind of sum up the quarter as a ramp-up period. We have been preparing ourselves for the spring and the summer and the future operation of the company. And that means kind of hiring people, receiving planes, launching new destinations, and basically making sure that the whole mechanism works. The fixed cost base of the company is already here, because that's the way aviation business works. We have to have a certain amount of fixed structure and infrastructure, and it doesn't really matter if you operate 3 or 15 aircraft. You kind of have to have the same framework around it. And just to kind of, I know that everyone is sick and tired of talking about COVID, but it's quite significant to keep this in mind when we are looking at the results and the future, because here we can see how we have been managing our capacity in line with the different kind of developments in the pandemic. And especially if we see maybe September, when we had to reduce the capacity a little bit, and then especially in Q1, when Omicron was really taking over, we had to scale our operation down even further. And that obviously has an impact on all the metrics, all the financial results and everything, because even though we were operating 3 to 4 aircraft, or mostly 3, I think, or had 3 aircraft, we were not utilizing them at all at full capacity. Not even if we would have kind of stayed at the red line, but we were reducing it even further. So this kind of winter and the quarter especially is not really comparable to anything else, because this is a completely unique situation. But what is positive to see is that we have been talking in these presentations and all our communications about that we see that the return is the return of demand and basically this pent-up demand of travel in the world. We have been seeing that happen since the beginning of the year. And so we put April there in for comparison, that we can see that the number of passengers have been steadily rising. And then now from the spring, like April, we are seeing a load factor of 73%, nearly 40,000 passengers in a month. And this is a trend that we will happily, or I'm very optimistic at least, that I will be able to report that in the future, that this is a trend that will continue, both in terms of load and passenger numbers, of course, will increase dramatically, and we already see that in our booking numbers. Just to kind of give a glimpse of the company, we had about 200 employees at the end of Q1. We have people from 13 nationalities. Most of them are based either here in Iceland or in Vilnius, where we have a growing number of really high quality and professional team. And we will have around 300 employees in the summer. Connected to this is an issue that is really important to us, and that is that we have we're starting a company from the beginning, and we are doing this for the long term. And what we have put a lot of emphasis on is company culture and the way we work together and the way we communicate together and basically how the company functions, because we believe that it's easy to lease aircraft or begin to fly and put a booking engine up, but the real factor that makes a company successful is the people and the way they work, i.e. the culture. So we have been investing a lot in that, and one of the things we did in the quarter is that we held many workshops, where nearly all of our employees came together to basically enhance good communication, honest change of opinion, and basically try to reduce the gap that is usually in an airline, where you have a lot of people working together, but they don't really meet often. So you have the crew that is flying, you have the people at the office, you have the people in Lithuania and everywhere, and we have to make sure that we feel as one team, and we can work together and we can function together. And that does not happen by itself. It has to be invested in, and it has to be kind of grown. And we are doing that. And not only that, we are also measuring how we're doing in that process. And we're doing kind of bi-monthly, very detailed surveys within our employees, obviously completely anonymous, and it's done with Gallup. Basically how people feel at work, how proud they are of the company, and basically how we are doing as a team and as a group. And in this particular survey, we got 97% answers, and they were very positive. We have a really high score of engagement, basically how people are functioning and if they are ambitious and want to work in the company, want to take part in the company. Job satisfaction is also very high, and pride is also very high. So this is like 4.2, 4.4 on a scale of 1 to 5. So these are really good results, especially for a new company. We're all getting to know each other. We're coming from COVID, where we have been working from home. So we have a really strong foundation, and we are going to build up on that in the future. I've talked a few times about the way we distribute our fares and the way people and our passengers can book our tickets, and we are constantly growing that roster of options. And having said that, about 70% of the tickets that we sell go through our own website, which is very good. But since we are a new company and we're functioning in markets, 25 markets at least, it really helps to have a wider distribution network. So we are present in all, I would say, all of the major channels, and now just these days we are integrating our content into Expedia, which is a huge milestone for us. And in the quarter we also launched 2 new destinations for next year: Geneva for skiing, seasonal in the new year 2023, and then Liverpool, which we will begin to operate in October. Liverpool for Icelandic people going to see the football and experience the cultural revolution that is happening in that part of the UK. UK tourists are a huge growing population of people that are coming to Iceland in the winters, and then obviously connecting those markets to Europe, to the US, because currently there are very few connecting options to the US from Liverpool. And finally, again, something that we can allow ourselves to put emphasis on and is really important in terms of the kind of world situation, the demands from society, investors, our employees, and all the stakeholders, is that we are putting a lot of emphasis on sustainability. And what we did is that we integrated a really cool option and gave our passengers the option of carbon offsetting their kind of flights with a wide option of certified and validated projects, and this is integrated into the booking engine and in the purchasing process, and has been met with very positive reception. I would also just want to recommend anyone that is interested in what we're doing in sustainability to go to our investor website on our flyplay.com website and see our annual and sustainability report that we just published about a month ago, which really details what we're doing in this regard. And I'm sure that you will be very impressed. I want to welcome Þóra Eggerts, our CFO, and she will talk us through the numbers. Þóra.
Thank you, Birgir. I'll be going through the financial results for the first quarter of 2022. The financial position of the company continues to be strong with an equity ratio of 22% and a cash position of $42 million. Play is evolving quickly and growing with additional destinations, more staff, additional aircrafts, start of hub and spoke, and increased capacity. And this, of course, needs to be kept in mind when we look at the financials and their developments. Let's start with going over some financial highlights. We are like any other airline these days, and particularly during times like these, focusing on retaining cash and cost control. Total revenue was 9.6 million and remained the same between quarters. Yields continue to increase and increased by 10% in Q1 compared to 2021. And the portion of ancillary revenues continue to increase. Financial performance. EBIT was negative in Q1 as expected, as the company has yet to reach its economy of scale. The Omicron variant impacted revenue during the quarter, and the war in Ukraine resulted in higher fuel prices towards the end of the quarter, both of which affecting financial results. Balance sheet. Play continues to have a strong balance sheet with no external interest-bearing debt and a healthy cash position. Income statement. During the quarter, Play continued to be in its ramp-up phase and preparing for US operations and delivery of aircrafts. Financial results reflect that, for example, in staff cost, sales and marketing cost, and aviation cost. When further economy of scale is reached with the launch of the hub and spoke model, the delivery of more aircrafts, financial results are expected to improve. Total loss amounted to 11.2 million in Q1. The main additional contributing factors to the loss, other than mentioned before, were less revenue than initially anticipated last year due to capacity adjustments that we made in January and February due to the Omicron variant. And the war in Ukraine resulted in higher fuel prices towards the end of the quarter. Total revenue was 9.6 million, of which 2.5 million were ancillary revenue. Operating expenses in total were 17.3 million. Staff cost increased between quarters due to hiring of staff, mostly crew members, relating to the ramp-up phase and training cost. As mentioned before, the war in Ukraine resulted in higher fuel prices, and also ETS units relating to 2021 were, however, fewer than previously reported, resulting in a positive effect on ETS cost in Q1. Financial expenses were negative by 0.6 million, 0.7 of which were due to currency gain. Operating income. If we look at the development of our operating income, we can see that RASK is increasing, and we anticipate that that will continue. RASK has grown 41% since Q3 2021, from 2.9 cents up to 4 cents in Q1. Increase in ancillary revenue per passenger is driven by the value-added services such as cancellation protection and seat selection. We anticipate ancillary revenue to increase further with our new booking engine, which allows us to add new services and optimize existing services. And RASK for April was, for example, 5.4 cents. Airfare revenue amounted to 7.1 million, representing over 73% of Play's total revenue. And ancillary revenue amounted to 2.5 million, or 27% of revenue. Ancillary revenue per passenger was $47, but Play continues to have the COVID-19 flexibility policy, which allows customers to make changes to their flights without paying the standard change fee, which in turn affects ancillary revenue negatively. Play put on a fuel surcharge, which was applied in March and is intended to mitigate the increase of fuel prices, and we are already seeing this having its intended effect. And there continues to be a steady improvement in bookings, positively affecting RASK performance. Operating expenses. When looking at operating expenses, excluding fuel, we can also see a positive development, which is in line with expectations. And overall, Play has been successful in keeping costs down. CASK excluding fuel was 6.8 cents in March and decreased by 23% during the quarter from 8.8 cents in January. And for April, it's down to 5.3 cents. Play is still building infrastructure for future operations. Therefore, CASK excluding fuel is expected to continue to decrease further once economy of scale is reached with additional aircraft and network expansion. And as shown on the graph to the left, we expect to reach our goal of being under 4 cents CASK this summer. Balance sheets. Play continues to have a strong balance sheet. The balance sheet amounted to $256 million at the end of Q1. We took delivery of 1 additional aircraft during the period, and therefore a new lease agreement was included amongst the right-of-use assets, which totaled $162.2 million. Intangible assets were $11.2 million and related to the start of operations and IT development. Trade and other receivables were $19.2 million and increased by $12.4 million, which was due to increased sales and bookings for the summer and represents acquirers' unpaid ticket sales to Play. Play's cash position is strong, with cash and cash equivalent amounting to $42.12 million. And shareholders' equity totaled $56.5 million, equaling an equity ratio of 22%, and keeping Play in a comfortable financial position. Non-current liabilities amounted to $146.6 million, all related to aircraft leases and increased between quarters due to the additional aircraft. Current liabilities were $53.16 million and consisted of $20.6 million in aircraft leases and provisions, and deferred revenue was $23.47 million and increased considerably between quarters due to increased sales. Cash flow. Operating cash flow before adjusting for changes in working capital deteriorated by $8.9 million over the period, driven by the effect of COVID-19 pandemic on the business. The positive contribution of working capital changes to operating cash flow was $3 million, and the main driver behind the increase was deferred income and receivables related to forward bookings. Net cash flow in investing activities decreased by $2.1 million and was due to deposits paid for aircrafts, which amounted to $1 million, and investment of operating and intangible assets of $1.1 million. Negative cash flow from financing activities was from the repayment of lease liabilities of $2.1 million. Fuel hedging. Due to the extreme volatility of the fuel market, a decision was made to take a conservative step towards implementing Play's fuel hedging policy. A physical fuel hedging agreement has been made with Skeljungur, which is in line with the hedging policy. And as mentioned, a conservative step has been taken. We are hedging 20% of estimated consumption 3 months forward and 10% of estimated consumption 6 months forward. A conservative step was taken, but the volatile economic and political situation globally will continue to be monitored closely before further steps are to be taken. However, the fuel surcharge put in place in March does, however, manage to mitigate a notable portion of the fuel price increase. And that's it from me. I'll hand it back over to Birgir, who's going to go over the CEO updates and outlook. Thank you.
Thank you, Þóra. This is what we like to see: lowering CASK and hiring of the RASK revenue. That's quite good. Okay, the outlook and how we see the future. We have been showing the development of our sales since we started doing these presentations, and we continue doing that. And these are kind of the total development of sales, and we see a strong rise in sales. Obviously, fluctuations as they go. We have Easters and various things that impact the total number of sales, but the trend is up, and the amounts are growing quite quickly. We wanted also to show the impact of the war and of the invasion into the Ukraine, which had a very, very short-term impact, a few days that the market hesitated, but then the kind of bookings grew quite quickly again. It's also interesting to look at the development of the different markets, because now we have the VIA market, the connecting market of the US to Europe coming into play and becoming a real issue for us. The red line there is the from traffic. As I said before, it's the Icelandic people going abroad. The dotted gray line is the tourists coming to Iceland, and the blue or the purple line, whatever it is the VIA traffic. And what we can see, and it's interesting to note, is that in the last few weeks now, we can see that the tour traffic to Iceland is kind of plateauing. There's no collapse in it, but it's kind of plateauing, and I think that's in line with maybe the what has been happening in Iceland is that the Icelandic tourism sector has a difficult time of basically getting its capacity up again, manning the hotels, getting rental cars available, and these kind of things, and maybe people that want to come to Iceland are having a hard time finding something to do or somewhere to stay. The strength of our model, and the reason we have always been fighting or explaining and fighting to get this kind of transatlantic operation off the ground is basically shown in this graph. Because when we see that one market segment is going down, we can simply put more emphasis on something else. So we can now see that the VIA traffic or the connecting passengers are more or greater in number as the other two segments. And this is something that we can basically adjust. So if we would find more demand from some other segment of the market, let's say the tour market, we can also just adjust that back if we wanted to do that. So this is the reason why it's so important for us, and I think all airlines operating this kind of hub and spoke model out of Iceland to have these kind of three main levers to pull in the business model, and we are finally to the stage now where we can begin to play with those dynamics. We also highlight what happens when we actually start flying to a destination. One thing is to announce it. You can begin to sell tickets, and we can see that the connecting kind of sales grew and have been very promising. But as soon as the aircraft comes and the operation begins, we can see a real bump in sales. And just to show that, we just are showing the BWI, the Washington, the route is that as soon as we began flying there, we saw a notable bump in the sales. And we can see that in all our destinations. So it has to be kept in mind that this kind of, we're now in May, we're talking about Q1, we are really at the turning point here where we are really becoming, as I sometimes say, a real airline, where we are really in control of the market. We have all our kind of things in play, and we can begin to behave dynamically in the market. We can see the same dynamic in Boston, which we started flying to 2 weeks ago. We will have New York in about 2 weeks from now, and so this is what happens when you add all these destinations. And we have a lot of destinations coming in. And these are just the destinations that we're adding now in May and June. So the network is really happening, and we are rolling it out, and we see the sales really increasing because of that. So this is why we have always been able to say that the future and the future bookings and basically the year itself, even though we have now, I hope, been able to say goodbye to COVID, we are extremely positive about the future in load and revenue. Having said that, the world has changed a lot in the last weeks, months. I'm not going to say 2 years, but at least since we began this year and this quarter, we had this horrible invasion of the Ukraine. That even though that didn't impact our sales negatively, it obviously changed the economic environment in the world quite significantly, most particularly in regards to the oil price. And we have been taking steps, and Thora talked about our hedging strategy. It's kind of important to realize, because a lot of people watching this are professional analysts and finance people, and some people are just interested in an airline. So I just want to take 1 minute to explain what a fuel hedge is. I have talked to a lot of people that think that this is some kind of an insurance, that you can basically, like you have a house, you pay a premium, and you have removed your risk of higher oil prices from your business because you pay something. What it is actually is a bet. You're committing to buying a certain number of or certain amount of fuel at a certain price. This is extremely volatile and risky to do, because as I just showed you, we are managing our capacity up and down, and it means that it's difficult to turn or reduce the capacity if you've already committed to buying the fuel. And even you're committing to buying the fuel at a certain price, the prices are going up and down, and so it's really a bet. So this is why Thora is talking about doing a kind of a conservative step to get the framework in line, because you really don't know until afterwards, like all bets, if you made a good bet or not. So we are, and let's face it, airlines have lost a lot of money over the years doing this. So we are taking this in a very slow step, but we are doing other things also, and we are always reacting to the different or the changing market environment, and basically calculating our routes and how the business is functioning. And we have realized, and like I guess most of the aviation and probably most of the business community in the world, that high fuel prices are here to stay for a certain period of time. Everyone is forecasting them to go lower, but they are not going to tumble in the next kind of months or weeks. So we have been kind of going through our options and seeing what we can do to mitigate that somehow. One of the things that we quickly saw, that our planned route to Orlando became very kind of not as attractive as before. It was a long-haul flight. The percentage of fuel cost in a long-haul flight is more than a short-haul flight. So it became like unprofitable, and we basically saw, okay, we launched the product before the war, before the spike in fuel prices. Everything has changed. We need to do something about this. Another thing that happened at the same time is that the price of aircraft tumbled again, similar to what it did in COVID. Because of things that was happening in Russia, a lot of capacity, new aircraft are going into Russia, they're not going there, so basically the market prices of aircraft went down. So we were able to get an aircraft into our fleet and basically swap the long-range aircraft we were going to use for Florida for a better plane that fits better into our fleet. It's less expensive, and most importantly, we can negotiate terms that reduce the payments or the financial burden of it in the worst time, which is in the winter, because of the seasonality of the business. We have demand in the summer, and airlines have a problem in the winter. So we are able to kind of reduce our payment load or cash outflow with this. So we basically had to take the responsible decision to cancel Orlando as a destination. We are going to start that in September, so it's still quite a long way off, and basically get this aircraft in. It's the right kind of and very responsible decision for the company, but I completely realize that this is very inconvenient to our passengers, and I sincerely want to apologize for that, but there's simply nothing that we can do about it. There's no benefit for anyone to go ahead with a project that is completely unprofitable and basically having to deal with the consequences of that. So we are running the company here. We have a responsibility to our shareholders to run the company in a profitable manner, and sometimes you just simply have to take difficult decisions. We have presented our passengers with a number of options to kind of minimize their inconvenience, but I completely understand and realize that this is still a massive headache, and again, we sincerely apologize for that. So, just to summarize, what we have done in terms of the fuel prices. We adjusted our capacity in April and May, like we talked about in our last presentation. We have reallocated some capacity. For example, we canceled Stuttgart as a destination and moved that capacity to higher performing markets, south of Spain and some European city destinations. We have some fuel saving initiatives. And as Thora said, we introduced a fuel surcharge in March, which is doing its job and taking some of the hit of the high oil price from us and actually doing quite a good job in that. And what are we going to do? And like I just said, we will always be adjusting our capacity and our network a little bit. I think all airlines are doing it, especially in this kind of fast changing environment. We will be forced to suspend the Orlando service, like I said, change our fleet plan and implement the fuel hedge. In the big picture, this doesn't really change our plans at all for the future. We will have 6 aircraft this summer. We will have 10 next year. They are already secured. We will begin to receive them from this fall, basically. They will be in storage over the winter. Then 12 and then 15, so the extra 5 until 2025. We're in negotiation for them now and checking out the market. So the overall long-term plan for the company are unchanged and actually looking quite good, because at the end of the day, strictly from the business point of view, this new addition of this aircraft lowers the cost base significantly in the long term. So this is the network as we have it on sales now. We have the 3 destinations in the US connecting to various destinations in Europe, mixed with seasonal destinations and kind of South Europe destinations. We will obviously next year introduce new destinations with added aircraft and added capacity. So this route network will become more dense and there will be more options for our customers. And what we have to do now in the coming months, since we have now launched the transatlantic operation, which was the big goal for the last 12 months or so, we have to continue to react to the environment. I mean, everything is changing. We have all kinds of things coming up, and we are always moving and changing the way we behave to make sure that we are operating a good and profitable company. And last but not least, that we can ensure that the CASK progression or development, like Thora said, continues to reduce or the CASK becomes lower, because the cost, we are a low cost business, and in order to be able to offer low fares, we have to have low cost, and CASK is the only way to measure that, and that has been reducing, and we want to take all measures to continue that development. And then we just have to run the airline. We have to optimize our hub and spoke network. This is a highly complicated connectivity, a lot of IT stuff, and a lot of things that we need to consider. We need to make sure that our on-time performance is high and good. We need to make sure that the commercial activity, the sales and marketing is optimal, and focusing on the quality of customer service, both in flight and online. And we have had a lot of feedback, and people are happy with us. We have great crew on board our aircraft. We have great people in service, and we really put a lot of ambition in making sure that our customers are happy. And then once we have now launched our network and we have our booking engine live, we have a lot of new things that we can do, like Thora said, to increase our ancillary revenue, come with new digital services, and basically fine-tune the way we do business. And then, like I said, we have to prepare for the next expansion next year. We have to receive new aircraft, we have to hire new people, we have to launch new destinations. We will be around 500 people next year, which is, again, massively important for the Icelandic economy, because I mean, we are creating hundreds of jobs here in a really short period of time. So there's always, the days are long and we're busy, but we love it and we're happy. Key takeaways from this, to summarize all these points, is that the booking is really strong. Like I told you, the future looks good. The demand is in the market. Our load factor is growing. The cost is going down. The revenue is going up. So we are really seeing the business model coming to play and the kind of economies of scale working. And I'm quite confident that we will begin to see some really positive things in the business. We're rolling out the fuel hedging strategy and basically trying to react to the fuel prices and changing our fleet and doing things to basically ensure that we have a low cost base and the operation is efficient and streamlined. So I think that was the presentation. We will go into questions at the moment, and I will again welcome my partner in crime, Þóra. Yes, we have the first question, which is very understandable. Last presentation or quarterly presentation, we gave a certain guidance for the year. It was not very detailed. It was kind of in broad strokes how basically we see the market or the financial operation of the company develop. We are not making any changes to that guidance. Like Þóra has said, and we have mentioned a few times, we see the cost decreasing. We fully anticipate to reach our goal of getting ex-fuel CASK under 4 cents. We still are expecting to have a positive EBIT at the later part of the year, and we do not have any plans to go into any kind of capital increase or share increase. So we just see, like I've said a few times, the sales are growing, the costs are decreasing, the demand is in the market. So we are cash strong. So for now and for the foreseeable future, we don't see any reason to change that guidance. There's another one here about, probably I guess related to the oil prices, about the inflation. How are you tackling the rising inflation? Þóra, do you want to take that?
Yes, I'll take this one. Well, a lot of our substantial portion of our cost base is connected to like fixed contracts. So, for instance, our aircraft leases and so on. So a lot of our fixed cost is in fact fixed. And the other side of the equation would be to, of course, increase airfares. And we, like any other airline, are of course trying to do that as well.
As far as I understand, there's no other questions. So I think that we will conclude this. I want to say that the 7th of each month we publish our traffic reports, because it's quite a long time until we come here back again. It's the end of August, I guess, with quarter 2 and the outlook. So interested people and parties can follow us via our traffic reports, and we publish that, like I said, first week of each month. And if there's nothing else, I want to just thank you very much for taking the time to join us and follow us, and apologize for the technical delay we had at the beginning, and hope you have a nice day. Thanks a lot.